Happy Friday, traders. It is 8:03 a.m. Chicago time, 9:03 Eastern on the 28th of September, 2018. It is the last Friday of the month and quarter, which means that we have to come into today. Keeping in mind that quarter-end adjustments are likely to take place today. Just bear that in mind. Thanks for joining me for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Thanks to all of you who put in your location, city and country and so on yesterday. Very interesting, huge diversity. Some of you even put them in the comments section of yesterday's video. Anyway, the overall market sentiment today, risk off, looks like we are, the bunds are leading up 99 cents, up 0.63%. The US dollar up 30.5 cents, boosting Asian exporters. The overnight market was, at least the extended hours, my time, were pretty steady in a sort of an uptrend or sideways trend, actually, until the European markets opened, where Europe found out that Italy's budget's about 3 times the prior budget, creating a bigger deficit and putting them on a crash course with the European Union Commission. And so that sent the European markets dropping, and we have not recovered from that much at all. So we're trading lower, although yesterday's setup was pretty significant in terms of the market having found a top intraday, but was still finishing with strength. So expected today to be sideways to up. And it looks like we're opening just at the lower end of yesterday's range, at least in the US. So that's what we've got overnight. The DAX is the laggard, 217 points down, 1.75%. The Euro Stoxx down 1.6%. Again, feeling the brunt of what's happened in Italy. Other than that, we have several numbers. We just got core PCE, consumption, personal income, personal consumption. We still have Michigan, Chicago PMI, which comes out at about 941, 942. Eastern expecting 62.5 at 10 o'clock, half hour after the open. We get University of Michigan final, which isn't all that impactful on the final number. The prelim is, and that'll end the slew of releases for the day. There's also the Brexit issue, a lot of politics around the issue. Prime Minister May having to put out fires on that. Everybody seems unhappy. Everybody's generally unhappy with politics everywhere nowadays, I guess. So that's where we stand. Yesterday, here's what was expected. The primary scenario yesterday was looking for a push back up to 29.20, 21, and then was looking for sellers to step in to push it lower, an impulse down, and then for us to take out the overnight low and push back through to 29.07, extending the range down. East no happen. Scenario 2 was a drift down that then gets an impulse up and pushes into 27.28, comes into balance. Not really what happened. Here's what actually took place. Market drifted down a little bit to 12 and pushed right through. We had a small test of that 2075-21 area. There's a single print right here. But the rotation on it was very poor, just 3 points. and then the market just pushes through and into the prior day's point of control, which is this maroon right here. So we push into the prior day's point of control, we hold steady, and then we balance like we would expect, and then it continued higher into 32 before sellers came back in the afternoon and brought it back into the IB, closing with the point of control lower than the prior day. This was not expected. I expected a higher point of control. I found yesterday, although there were a lot of swings and it's kind of a scalpers type of market, I found yesterday a little more difficult to read, to be honest with you. And overall, the profile shows that the top we put in was not exactly an excess high. The bottom we put in was a very poor low, and prices traded quite evenly throughout, except for, of course, the point of control just protruding out. And so overall, the market was really seeking value yesterday and was unsuccessful, in my opinion, in finding it. It closed at 29.20. It's versus the 29.1175 the prior day, and it's currently trading at 29.13 down here. I think that it did stay in range. It did stay in range, and we traded above the lower high volume node into the balance of the prior day and back. And to me, it just looked like it was likely to push into balance today, another balancing day into quarter end. But again, the overnight action and the news from Italy has squeezed it down a little bit. The overnight session, we reopen, a little bit of strength, push up to 24, and we hold sideways. Not much action there. And then as soon as Europe opens, we get this drop, pull back through the mid, and drop even more. And now we're pulling back to yesterday's low and are holding this area. Looks bearish to me. A double distribution overnight profile. Very high volume, about twice the mode of volume, overnight volume over the last 1,500 days, and holding steady on the low end. So we are back. If you look at the overnight session, this high volume node here carries forward to this high volume node from yesterday's overnight session, which is built on top of the high volume node left behind from the sell-off day, the FOMC day on Wednesday. And we seem to be accepting this area down here. This looks bearish to me short term, not long term, short term. The long term trend is higher. We've been consolidating for a couple of days. It's important to keep track of what the big picture is. Again, we built this channel, popped out of it, came back, popped higher, and we've been consolidating and pushing higher, new all-time highs. And what we've done is we popped down, we engulfed it, we engulfed that, and now we have an inside day. So we were building kind of a megaphone type of formation. Now we have an inside day to the low side, and it's likely to push to 2,900. 2,900 as it's not successfully finding aggressive buyers. Yesterday's buyers, if you look at this candlestick, you could see yesterday's buyers, we opened, we pushed up through to 32 and came all the way back to 29.20. And so the buyers are not doing a good job maintaining or holding higher prices. And in order for this process to continue, we would likely see it dip lower to find those buyers, to create value low enough for buyers to step in. It's what's likely to happen. Now, there's a lot of news flow, as I've been saying. There's a ton of news flow happening all the time. These days, we do have a Supreme Justice a Supreme Judge being nominated and voted on by the Judiciary Committee today, so we can send that to the Senate. And then the Senate may or may not vote for this guy. It's really messy. There's the Brexit issue. There's Italy. There's China. The China-U.S. Back and forth, with the economic minister coming out yesterday and saying they're open for more discussions. The U.S. just needs to be open to it and cannot arm wrestle us into conceding on tariffs and so on. It's just a lot of rhetoric and a lot of stuff that the market's kind of pricing in as it finds it. So that's how things are shaping up. To get to what we've got today is a little bit tricky. So as we extend this profile forward, this red profile of where we are in terms of balance. Remember, these micro composites are really tracking where balance is. Look at how heavy that middle the middle profile is. How heavy the consolidation is. And so we have to bear in mind that we've traded this so much at this point that we're likely to get, so we have what is clearly balanced, even though intraday it seems like it's pushing one way or another. We have an open test drive down, and an open higher, a strong open higher on Wednesday that reversed completely and then reversed again right here. This is pretty tough trade right here. It opens, pushes up strong, pulls all the way back strong, and then swings the other way before the FOMC. Yesterday, it dips down and then it pushes higher. And once it gets to 32, we don't get the extension into 36 as expected. Instead, we get it drooping back over and coming right back. We get this strange, or not strange, but unusual pattern of this big arch kind of a day on the 15-minute. Just, you don't see that often. And so that's so we know that a lot of activity is going on, but consensus is not being found just yet. And we are testing the extremes of balance, up and down, up and down, up and down. So what are we expecting for today? Well, the first thing I expect is that you would hit the like button before we move on. Please find the like button on your YouTube video on your screen and hit it. I'd appreciate that. And then also, if you don't find it, then find the YouTube symbol, click on that to go to the video on YouTube, and then click the like button. Anyway, so what do we got? So currently we're trading around 29.12, 29.13. We've shifted the point of control down overnight. I'm expecting us to open with an open auction. I'm expecting us to be responsive towards the MC point of control. So I'm looking for this to see some resistance here at 29.17.5 to reach up into 29.20, consolidate for a little bit, and then eventually get back up to 29.25.50. That's what I'm looking for in terms of scenario one. Why am I expecting responsive? Now today could be the imbalance day where we break away, and we'll cover that. But overall, given the situation, I'm basically expecting trading from the outside in. This may push even lower. This may even challenge the overnight low before it turns and goes back up. We still haven't tested 29.07. I expected a test at 29.07 at some point. In fact, yesterday's primary scenario was for us to extend to 29.07 so we can see what's underneath there. Haven't done that. So this open today may do so, but ultimately I expect a response. The secondary scenario is an open that tests higher and then impulses down, starts pushing through the 29.07 and consolidating and then moving back up. It is Friday into the weekend here. Scenario 2. So I'm looking for failure in the 29.17 area. if that ever shows up. And if it fails, if it gets to 29.17 and doesn't just consolidate and continue to squeeze through, then I'm looking for scenario one. I'm looking for a pullback, and excuse me. And then I'm looking for the bigger target of 29.25, and it's holding fast for that. The secondary scenario is one where we push into 29.17 just like we see on scenario one, but we get a response. We get an impulse down. That tells me that 29.07 is on deck, and that will be the biggest target. That's basically those are the key plans. The tertiary, the third scenario is an open test drive up. This is a aggressive response that pushes us up early into the MC point of control, that then re-challenges yesterday's high before it peters out and finishes back in the range. That's scenario 3. Scenario 4, which as of yet we don't have a color for, and we're going to use a blue, I guess, maybe a lighter blue. Scenario 4 is the opposite, open. Try to get back towards the yesterday's close and point of control in the 29.20, and then have an impulse down, and that becomes the imbalance idea down, and that would push to 2900, consolidate, and 28.96 will become the next target. 28.96 would be key below, and that would be the fourth scenario down. And the reason I'm putting these the third and fourth scenario up today, but not prior days, is because we've been consolidating, and you can see the shape of the profile is protruding. There's a fair amount of kurtosis starting to build in the middle there, and it could result in us going out of balance. And if we go out of balance, that basically means we're likely to push in a trending type of fashion. Okay, so be prepared for that. This is not all hypotheticals and theory. This is how I trade. This is how I've traded for about 13 years out of the 18 or 19 years almost of my trading career, coming in and just seeing what I would target and what I would expect before the market opens. And then once it happens, and if you've tried this long enough, you might have seen the results of this. Once the market starts to play out, it becomes much easier to execute. This is part of what you're seeing in the Trader Bite here in this segment. It's part of the visualization process. Now remember, another week has gone by. Did you win the day? If so, did you win every day? Did you win the week? What have you accomplished this week in terms of destroying and obliterating one of your errors or one of your issues? That should be your focus. If you have not done that, I would spend this weekend, if you're serious about this, I would spend this weekend updating your trade log, taking a look at your journal, or starting one, and then setting goals for next week. Because every week that goes by where you see no improvement is a week lost. There should be some improvement. And I'm not talking about I'm making $200 this week and next week I made $220 and that's an improvement. That's not the improvement I'm talking about. I'm talking about process and following your plan. It's been a tough trade, I have to admit that, but you still need to follow your plan. You still need to hone in on your plan, because your plan is the thing that makes money. You're investing time in your plan, and that's what's going to turn into dollars if it has an edge. That's all there is to it. Good luck. Have a great Friday and have a happy weekend. Take care.